Good morning, students. Today we are going to calculate income from salary of government employee. This is the problem which is shown in the screen. So first I will read the problem, then we can calculate the salary. On the basis of the following information, compute a taxable income of Mr. X under the head salaries for the assessment year 23-24. So these are the items he is getting, like first of all, basic salary 4,200 per month, which is fully taxable. Dearness allowance, which is also fully taxable. Hill area compensatory allowances, this is partly taxable, partly exempted. Tribal area allowances, this is also partly taxable, partly exempted. Then house rent allowances, this is also partly taxable, partly exempted. X is an officer of the forest department of the government of UP. That means he is a government employee and he is employed at the place at a higher height of 1,000 meters above the sea level. So he is paying 1,200 per month as a house rent also. So this is the problem. Based on that, we are going to calculate the income from salary. Further, in this problem, we have added one more line, that is, he is getting entertainment allowance of 300 per month. Actually, entertainment allowance is taxable, fully taxable. But in the case of government employee, he can eligible to claim standard deduction, that is deduction under section 16 also he can claim. We will see one by one. Okay, first of all, basic salary, which is entirely taxable. So the basic salary into, that is 4,200 into 12 is taxable. So how you are going to present me? This is the structure. First, we will be writing the heading, salary income of Mr. X for the assessment year 2023-24. And within bracket, if you mention government employee, which will be very useful for you to, when you are calculating the allowances, exemption, all these things, it will be very easy. Okay, the first item is basic salary, 4,200 per month is fully taxable, that we are going to calculate. Okay, so 4,200 into 12 is fully taxable. So basic salary, which we are going to calculate. Okay, so you have to type basic salary into 4,200 per month. So basic salary, that is 4,200 into 12, totally it is coming 50,400. Next is dearness allowance, which is fully taxable. So next we are going to calculate dearness allowance, that is fully taxable. So DA, which is 600 into 12, if you multiply, then it is coming 7,200. Next is if you take like high compensatory, all these things are coming. But before that, we will finish it off with the entertainment allowance, which is 300 per month. So there is entertainment allowances, that is EA 300 into 12, it is coming 3,200, 3,600. So then next is hill area compensatory allowances. Already I told you this is partly taxable and partly exempted. How much it is exempted means 300 per month is exempted. So how you are going to calculate? Like first we will be writing how much is the amount, that is hill area compensatory allowances, which is 450 into 12, which is coming to 5,400. Then you are going to minus the exemption. Exemption is how much? 300 per month is exemption. So less exemption, 300 into 12 equal to 4,200. Now 5,400 minus 4,200. So 1,200 is the amount which is taxable, which is written in the outer column. Next is tribal area allowances. Tribal area allowances is also a partly taxable, partly exempted. So 200 per month is exempted. So first we will write what is the total amount received by him. So the total amount received by him is like 350 per month. So 350 into 12, which is 4,200 per year. And the exemption is 200 per month is exempted. So 200 into 12, 2,400, which is 1,800 is the exempted amount. Next is very important, house rent allowances, that is 800 per month is given. And here three factors we have to consider. So we'll see one by one. First, we have to write how much is the taxable, that is amount received by him. So HRA received by him is like 800 per month. So 800 into 12, 9,600. Now exemption, three category you have to take, that is least of the following is exempted. Number one is actual HRA received. Number 2 is rent, rent paid minus 10% of salary. Third one is where he is staying. If it is metro cities, then 50% of salary we can take. If other than metro city, 40% of salary we can take. So least of these 3 items will be exempted. So this person is not mentioned which place. It is given. I think he is employed at a place which is height of 1,000 meters. So that means he is not staying in the metro cities, that is Delhi, Mumbai, Kolkata and Chennai. So other than that, places will be considered as 40% of salary. Here, what do you mean by salary? Salary includes basic pay plus DA. If it is forming part of salary, then we can consider. Then fixed commission on sales. These 3 things can be considered as a salary. In this problem, basic salary is given, but DA is not given as a forming part of retirement calculation or salary. So we are not going to consider for sub-calculation. Next is there is no commission is given. So we will be considering only basic salary for the sub-calculation for the HRA. So we'll see one by one exemption. So at least 3 exemptions are there. So I'm going to show one by one. First one is rent paid minus 10% of salary. How much is rent paid? If you see here, it is given like he is paying 1,200 per month as a rent. So 1,200 into 12, then minus 10% of salary. Here salary means we are going to consider only basic pay. So 50,400 into 10%, which is coming 5,400. So 1,200 into 12 minus 5,040, which is coming as 9,360. Next one is like actual HRA received. So actual HRA received is 9,600. That also we have taken. And third one is he is not staying in metro city. So we will be considering 40% of salary. What is 40% of salary? That is nothing but like this is 5,040, not 40% of salary. That is like 50,400 is the total salary into 40%, which is coming 20,160. So here least is the exemption. Least of the following is the exemption. Which one is least? That is 9,360 is the least. So that one, if you minus, you are getting taxable portion is only 240. So 240 is the amount which is taxable part of the HRA. So once again repeating, here salary includes only basic pay because DA is not forming part of salary and there is no commission. So we are taking only the basic pay for a salary calculation, that is sub-calculation. Okay, I hope all the like allowances are taken, everything is over. Now we are going to take the total. This total will be considered as the gross salary. So gross salary we will be considering. So how much is the gross salary? 64,440, which is the total of this one. Next, we are going to minus the deductions. So what are the deductions? Number 1 is standard deduction. Number 2 is EA. Where EA will be considered as a deduction means if the person is government employee, then he will be considered for EA deduction. So we'll see one by one. Okay. First one is standard deduction, which is fixed 50,000. Next one is EA. EA, there are list of the following is deductible. What does that mean? Fixed amount is 5,000. Next is 1/5 of the basic salary will be considered. So here 5,000 and 1/5 of the salary is, it is coming 50,400 divided by 5. Again here salary includes only the basic pay. And here it is clearly given, it is 1/5 of basic pay only. So other items you should not consider. So next is like actual EA received also. What is the actual EA received? 3,600. Which one is least? If you see, like 3,600 is the least one. So that will be considered as a deduction, EA deduction. So there are 2 deductions are there, standard deduction and EA deduction. Now those 2 items we can deduct and remaining will be considered as a taxable salary. So 64,440 minus 50,000 minus 3,600 is remaining is 10,840 is the taxable amount of salary of Mr. X.